Is Nvidia still the boss of the market, or just another regular stock? In this week's cherry pick video, we're going to check out what Nvidia did with its earnings versus other stocks. Wait till the end till we check on another trade for one of Nvidia's competitor to see if it might be an opportunity for you. A couple of days ago, Nvidia had its earnings. Nvidia is not just one of the biggest stocks in the marketplace, it's one of the most popular. Nvidia sold off and brought down the rest of the market with it. Qs were down, the spiders were down. But what about some other individual stocks in Nvidia's sector? As we go and take a look at the cherry picks, Nick Batista and Mike Rickentine, and what the guys found was that back in February of 23, when Nvidia was up 14%, a lot of these other stocks rallied too. Right? So 92% of the stocks in the universe they put together rallied. May of 2023, 88% of the stocks went up when Nvidia rallied 24%. Now those are big rallies. When Nvidia was rallying, it would just pull all the other sort of technology and, like I said, the AI and AI adjacent stocks up with it. On August of 2023, performance wasn't as great. None of the stocks performed. Again, 4 months later, 3 months later, only 20% of the stocks went up. But again, 2% for Nvidia isn't a big move, so it's kind of a mixed bag. Let's take a look at some of the stocks today. AMD was one of the big stocks. AMD was down 87 cents. How about Marvell? Up $1.40. It's interesting. How about Micron? Up 71 cents. TSM, up 12 cents. Nvidia being down today, yeah, it kind of pulled the Qs down, but again, it didn't pull all those semiconductor stocks lower. Is Nvidia still driving the market, or is it just another stock? Who knows, right? That's just kind of a rhetorical question. It's an important stock to keep an eye on because it has such a big market cap, and it might have a bigger impact on market cap weighted indices like the Qs or SPY than it influences other chip stocks. So that's one way to think about it. The other point is that when those chip stocks move together, that's a sort of systematic risk. It's not like the whole market is moving with it. If you're trying to diversify a portfolio, when you look at this sort of information where what Nvidia does often drives what other chip stocks do. In other words, if you had 10 of these stocks as a portfolio, you're not particularly diversified. You have a chip portfolio. Chips go up, that's great. If they don't, maybe not so great. So just keep that in mind. There are some other big names this week: CrowdStrike, Salesforce, Lulu, Ulta. I'm not going to look at any of those right now. One of the things is gold has been outperforming broader market, but just has been very strong. Look at GLD, almost as high as it's ever have been. I can go back and look at a chart going back, let's say 5 years. Let's swing this over to monthly data. Yeah, it's as high as it's been in 5 years. It's pretty strong. What's happening in gold, I think, is with interest rates in the US dropping, that's also pushing down the dollar. There's more money flowing into gold simply because as you earn less on interest-bearing securities, gold becomes more attractive because gold doesn't pay an interest rate. When you can get a higher return elsewhere, you sell your gold, buy that other thing. But when those other things don't yield as much, you can turn around and buy gold. It could also be an indication of economic uncertainty in the world right now. People may be using it as a safe harbor, but that's pushing GLD really high. Compare that to silver. Silver has been pretty much stuck in a range. So let's go back and look at two trade ideas that the guys picked out. One was an SMH, broken wing butterfly, and I'll show you how to structure that. Earnings, with Nvidia earnings coming out, it counts for nearly 22% of the weighting in the SMH semiconductor ETF. If you think it might move higher but don't want the downside risk with Nvidia near highs, a broken wing butterfly would fix the assumption. Well, let's load that up and see what it looks like. Again, with a 50% IV rank, yeah, you can look at some short premium strategies in here. They bought a 47 sold a 50, sold a 52 half, I think, and bought a 65. They did it for about a 38-cent credit. What happened with Nvidia SMH is it dropped. And like they said, about 22% of SMH's portfolio is Nvidia, so is Nvidia down 6.5%? Yeah, SMH is going to follow along to the downside. That trade would have been profitable. Again, you could sell this out, generate a 5-cent credit, book about a 38-cent credit, 38-cent profit for that trade. Not bad, guys. Good work. So if you push this out to a further expiration, yeah, now you can do these for 8 days, for a week with 20-cent credit, $900 of buying power requirements. It's a little steep. It's a little steep. If that were too high for me, I'd pull this down. So what happens is when you have this, and the guys call it a butterfly. I hate all the little names. It's kind of a condor because the short options aren't the same strike. But the 247, 250, 2.5 points, and then 250, 2.5 to 265 is much wider. So there's an embedded short 257.5, 265 call spread in this trade. That's what's generating the credit. If I wanted less risk, less margin requirement, I would pull this back down to 57.5 strike. My buying power effect is only 265, but I don't get a credit for that. So what I might do, change that. So it's long one of these, short 2 of these 250s, and maybe long one of these. What do I get for credit? I get a 14-cent credit for that. $236 margin requirement. Not bad. You could do that for a small account, generate $3.37 of daily theta, and the max loss is $236. That occurs if you get a massive rally in SMH in the next week. So that's one thing to look at. Another one the guys looked at was a TSM, Taiwan Semiconductor. Again, big competitor to Nvidia, not as big, but certainly not as big as market cap, but again, a strong industry competitor. TSM is the second largest holding in SMH at almost 14%. It moves with a higher correlation to Nvidia, but a much lower beta. What does that mean? Let's take a look at the platform. So if I type in Nvidia, I can go over here and I can see Nvidia's correlation expand this little arrow, look in the overview, and down in here I see CORR, correlation. That 0.21 means that the times the S&Ps went up, Nvidia went up 21% of the time. So it's not highly correlated to the S&Ps. If I do TSM, 77 has a much higher correlation to the broader market. But let's take one step further. The guys talked about the beta. The way I see beta is I go into a watch list and I just have these laid out conveniently, and I have the beta as one of the columns, and I can add the beta in as one of the data points. So with a beta of 1.13 for TSM, Nvidia's is 1.69. What that tells me is Nvidia is about 69% more volatile than the S&Ps. You can interpret beta in a bunch of different ways, but that's basically what it is. If I go in and I see beta is 113 for TSM, it's 13% more volatile. So TSM is a less volatile product. Earnings are coming out in TSM in October 17th. The guys are looking at a short strangle, selling the 140 put and the 200 call in 50 days. So the 40 put and the 200 call. Looking at some of the metrics for this, what jumps out at me is this $5,000 margin requirement. That's a lot of money. Yeah, the max loss is undefined because it's got a short call. So it's an expensive trade. Probably more than a smaller account would want to do. The other thing too is you're trading through earnings, which you might not want to do. Even though TSM is less volatile than Nvidia, it still can surprise you. And with a short strangle, you got to be on your toes. So let's back this off to the 43 days. And the way I would get rid of that huge margin requirement is I would just turn this into an iron condor. So a short strangle turns into an iron condor just by buying some further out of the money put and out of the money call. I'm just going to go 10 points away and see what I get. That's not enough. So here's where I start testing it. I'm going to go and let's do some $3 options and see where I get. So if I do sell the 85 call by the 95 call, sell the 55 put and by the 45 put. Yeah, something like this. This has more appealing metrics in my opinion. So instead of a short strangle, I'm selling an iron condor. before expiration, I generate $4.72. It has a max loss of $675. Kind of big, but it's within reason. It's not huge. Only requires $675 of buying power to put in an account, and has about a 72% probability of making half its max profit, which is max profit's $325. That'd be about $160 or so. So if I were thinking that TSM isn't going to move much in the next few weeks ahead of earnings, I might consider an iron condor like this. If you want to get these cherry picks delivered to your inbox every week and my cherry bombs every day, click on the link below.